Welcome to Markets Now. I'm Michelle Rook with Ken Beadle, Paradigm Futures. Mixed trade in both grain and livestock futures this morning. And right now we do have the wheat market with Chicago wheat up a little bit. We've been kind of mixed in that wheat complex this morning, Kent. And I want to start off there just because we had this big sale this morning of over 16 million bushels of SRW wheat to China. Market had been kind of hearing rumors about this for a while. And so are we already have it worked in, or where do you think we go now?
Well, I think that, it has been a rumor, and it's very possible that this sale was expected, and that in some respects it may have been priced in. I do think there are other things going on in the wheat that are, interesting though. And, I point to a couple of them last week. We had some, bearish inputs. We had some Argentine yield results that were better than expected. We heard about Russian export taxes being lowered. These are the kinds of things that it would make wheat make new lows in previous times. And instead, we technically had a very large reversal higher in both Chicago and Kansas City last week. And we're doing that at a time when the large speculative position of the funds combined over all three wheat classes is at a record short. It's almost 200,000 contracts, which is a level we've never seen before. So, yeah, it's possible that today's strength is about this Chinese sale. And yeah, it's been rumored, and there may be some disappointment that there wasn't any hard red winner in that sale. But I do think that, we're technically maybe turning the corner here in wheat, and that we're starting to react a little bit better to good news, and we're not reacting as poorly to bad news. And I think that's a good sign for wheat producers.
Yeah, and last week for the week, I think, you mentioned the key reversals, and we were up over 25 cents in Chicago wheat, I think up over 35 cents in Kansas City wheat. So my next question to you is, how much higher do you think we will go here? And especially, is there a trigger point to get these funds to cover that massive or record short position?
Yeah, well, I had some sell point recommendations in my update this weekend, and I had, Minneapolis March at about 760. I had Kansas City March up near, I think, 685 to $7, and Chicago wheat probably up in the 650 area. So, I'm looking for maybe a 35 to 50 cent additional rally, just that would be driven by short covering from this extensive short position that the speculator has.
Do you think we'll get more business from China too to kind of drive this, or not?
I think that we're certainly able to, and I think we're priced that we're able to get some of that business. You do have to be a little bit concerned about escalation going on in shipping. There were merchant ships fired on this weekend in the Red Sea, as well as a U.S. naval vessel that was fired on. Never mind all the ongoing things that are going on in the Black Sea. We have the supply, and certainly we can be a reliable supplier. And so, if we get anywhere close in price, we certainly have a chance to get some of that business.
Were these part of the frame contracts that were signed in October?
So everything that I heard about those frame contracts, that they were soybeans only,
okay,
and that there was not soft red wheat in those contracts. But I don't have very close knowledge about that, and I can't say for sure if that's true or not.
Yeah. Some of my sources at the National Association of Wheat Growers and U.S. Wheat Associates were kind of hinting that there might have been some deals going on there. So I wasn't sure if that was part of it. All right, let's talk about the corn market. Corn not able to follow wheat. It did get some help from that market last week and posted a little higher weekly close. But we also had 10.5 million bushels of business to Mexico this morning. Why is the corn market not reacting?
Well, I think that, we had a good rally, and I do think that you still are going to get some, farmer selling of rallies that still ongoing. To be honest, I think that the corn probably made a significant low last week. We talk about commitment of traders in wheat, and we look at the same issue in corn. The managed money position is short over 206,000 contracts. On the CIT report, it's short over 220,000 contracts. And, I want to bring up one interesting thing about the corn position, and that is that the commercial, which is, the multinational grain firms, plus the processors, the ethanol plants, fructose plants, et cetera, large feed entities, they actually are long corn right now. And it is very rare that they're ever long corn. It has not happened at this time of the year that they've ever had a net long position in futures. And what that tells me is that corn at this price gives them margin, and that they're locking in that margin by buying corn futures in order to make sure that they're profitable going forward. And so, it just leads me to the conclusion that I'm not sure corn needs to be a lot cheaper. The bears in the marketplace are looking at the 2 billion bushel carry out and stocks to use, and where the price ranges were when we had those stocks to use from 2014 to 2019. But I think there's some things that are a little different today. We have higher energy prices, even though they've come down. We have higher livestock prices, and we have higher costs of production. And so you're not going to get a lot of farmers selling should corn get much cheaper. Basis levels, were up 4 cents on a nationwide basis last week. And I just think that, while we may not go up every day, I do believe that, we've kind of set the table for, some higher prices going forward. I did look at, times during harvest when that large commercial position was even close to being positive at harvest time. And the average rally of March corn in those years was about 56 cents a bushel. So I'm looking for something modest, modest recovery here into December and probably into the month of January.
And soybeans pulled back last week with some of these Brazilian rain forecasts, at least the extended models looking a little bit better. But we are, after a lower opening, coming back here this morning. We did have a nice meal sale to the Philippines. So, do you think it's underlying demand that's kind of pulling that market back? And do we need to be at a little higher price, do you think?
Well, the question is, do we really need to be a lot lower? We settled the week right on top of the 200-day and the 50-day moving averages. Obviously took them out in the overnight session, but now have recovered. We're going to get a supply demand update here this coming Friday. The last one had ending stocks at 240 million bushels. Our export pace is just strong enough to be able to maintain that export estimate, in my opinion. Friday, we had the oilseed crushing report, and that number was good, which supports the crush number from the USDA. So we don't see smaller demand, and without any change in supply on this report, we're going to have another month with a carry out at 240 million bushels, which is, below the carry out levels we've had each of the last 3 years when we had much higher prices and a tighter situation. So, the people who are looking for lower prices are doing so primarily on South American production. And, unfortunately, the privates have been downgrading the size of those crops. They may get better. Okay. We do see rain in the forecast, and, I'm not giving up on the size of the South American crop. It could be as large as what the USDA says, but they're going to continue to need to have good weather, given the poor start that they had.
Yeah. Cattle market continuing to see pressure here this morning. Is that going to continue, especially with these weights creeping up here now?
Yeah, we've got a problem with marketings. We just haven't put as many cattle through the system. Those heavy placements into feedlots here 2 months ago, those cattle are still there. Our marketing totals have been small. Slaughter last week was lower than anticipated, and weights are getting heavier. And so we've got to work through this cattle supply and these larger numbers before we're going to be able to turn the cattle market around.
Yeah. And what about hogs? New contract lows last week. We bounced off those levels, had a higher weekly close. But, again, do you think the lows are behind us now?
Well, we left kind of a double bottom in June hogs, for example. Always good to see the technical action of testing a low and then turning around and reversing higher. So technically, the markets look a little bit good. I do think it's a little early, however, for us to feel like we're out of the woods yet. Last year we made our seasonal low in hogs in mid-January. We've got a little bit of time left. Hog production is up. I think we're now up to 1.7% above a year ago. There's still a lot of pork out there. Granted, it's priced an awful lot cheaper than beef is, and those spreads have been coming back together here a little bit. But the one thing that you can say is that the funds are short about nearly 30,000 contracts of hogs, which is a fairly sizable short. And if they do decide to cover, well, then we probably have made our lows.
Okay. And we have better crush margins really for both cattle and hogs here now. I mean, you've got feeders down at contract lows, right?
Yeah. In fact, our calculations in cattle last week into the April and June contracts were at new highs because of the lower feeder cattle prices.
All right. Well, thanks for joining us. Kent Beadle, Paradigm Futures. That is Markets Now.